Morning folks, as promised, here's an update on natural gas. I've got the 4-hour chart here at Black Bull. This is sort of our base chart, the 4-hour chart when we're trading natural gas, and we do look at the day chart, sometimes the shorter term timeframes, but mostly on the 4-hour chart. And the 4-hour chart gives us our entry and exit signals. But first let's go to the day chart and see if there's anything obvious here. And we could even look at the weekly chart. What we do see on the day chart is that we've dropped down to the 20-period moving average here. We're currently trading at 3.8. We did get low as 3.75, and if you've been following me for a while, you know that's a pretty important number in natural gas trading. 375, 250, $2, $4.20, and so on. So there's a few key numbers that the market often reacts to. 375 is one of them, and it so happens that right now it's also where the 20-period and almost the 50-period moving averages are. So as long as we're above the 20-period moving average, we remain bullish on natural gas, and the moment we close beneath there, we'll start to look towards the short side. Right now, I don't think there are very high probabilities either way, and I want to look at the 4-hour chart to see if there are any obvious signs of reversal. Apart from the weekend gap, this little gap down, we had one 4-hour candle, and then the next 4-hour candle was a bullish engulfing candle, but we only bounced up to the underside of the 100-period moving average, and we're kind of stuck there right now. We haven't quite closed that weekend gap. Often natural gas will close gaps, and it's possible we could try and do that. But as you can see, there's not a lot going on here. What I do like to draw is some trend lines, and let's put one in from the top to the bottom. So we can put a trend line in like that and start to add some structure to this chart. I'm also going to make a duplicate of this line and clone it and drag it down to form a channel bottom, just touching the low point of that swing low. And this gives us further areas that we could reach down to the bottom of the channel or up to the top of the channel. Notice where the channel top is, close to the 20-period and the 50-period moving averages here on the 4-hour chart. We've also got the 200-period moving average here below us on the 4-hour chart, an important support and resistance level. Let's see where the 200-period on the day chart is. You can see that's well below us down here at this bottom trend line, the shallower trend line. We've broken down through that sharper, shorter, steeper trend line. We gapped down, found support, that's where we were buying, and then we got out near the top at the underside of this rising channel line. An almost perfect technical pattern. My current positions are shown here in green and red, and I'll go back to the 4-hour chart just to illustrate that. And as I pointed out in the last video, which I will link at the end of this one, we went short and almost immediately we got hedged with a long position about 9 cents above us. We also only have a very small position on here, so essentially, we're not really in this market to any significant extent. So we've got this 4-hour channel that we've just created. Let's just quickly go back to the day chart and see where we could get down to on the bottom side. Of course, 375 is a very key level, as I said. We may find support here. I'll be watching for that very closely today. Then, of course, we've got the 350-ish level and the $3 levels, both key levels. And they also coincide with these Fibonacci, 38% Fibonacci, 50% retracement level. So those are below us, and also we've got this rising shallower trend line, the 200-period moving average, and an even shallower trend line down here, which we could also reach. I haven't decided if we're going short just yet, by the way, just pointing out opportunities on both sides. On the top side, well, we reached as high as 4.45, but we could go higher. Let's look at the weekly chart and see what lies above us, which could be potential targets. And of course, we got that market structure break, which I pointed out probably about 3 weeks ago, and that's at 4.72. So that's a potential target, as is the swing low over here at about 5.35. Just zooming out on the weekly chart, you can see kind of bullish, really. We closed that gap, big rally. We had lots of bullish weeks, making a little bit of a blow off top there, pulling back, gapping down, but no real downward movement either, and also no upward movement. Let's go back to the 4-hour chart and have a look at what we're dealing with right up close. So there we are. There are our hedge positions, 9 cents apart. It's really only about a 20% size position, consolidating under the 100-period moving average, above the 200, and of course we got the 20 and the 50 above us as well. So strategy for today, I think we're kind of diddling in the middle. If we drew a channel center line, we'd be right on it, and we're also right at the 100. And therefore, I'd like to see us testing the top of the channel, or the bottom of the channel, or the 200-period moving average before we make the next decision. It's only Monday, and there's plenty of time left in this week, so we'll watch to see how this goes. But if the first move is a breakout through the top, then we should consider the breakout pullback type trade, and that would look something like this. Breakout, a pullback, and then a resumption of the trend, something like that. On the other hand, if we're going to move low, we could get down to the 200-period moving average and bounce, something like that. But more likely is a continuation of the move down towards the bottom of this channel and down towards the confluence of the channel and this horizontal line at about 3.45. And then perhaps a little bounce from there and a continuation down. So there are all sorts of scenarios that play out or that are possible right now. because we're diddling right in the center of the channel and we've got no real momentum or direction in either way. So for the early part of this morning, my strategy is to stand aside and wait to see which one of these paths starts forming, and then to make a decision thereafter based on the 4-hour candle patterns and what we see on the longer term charts. A lot of traders find trading natural gas really difficult, and let's just start off with a name, the Widowmaker. That's enough to put the spook into anyone. But it's a difficult instrument to trade, but what people do notice is that we can move 5, 10, 15, 20% in one day. Traders generally want to take advantage of that volatility and learn how to trade the natural gas market, but don't quite know how. The good news is that next month in March, I'm releasing a new natural gas trading course, and the more details will follow as we go along. But if you're interested in the course, make sure you subscribe to this channel and also go across to my X channel and follow me there. It's at ArcisFX. And make sure you press the notification bells on each one of those channels too, so that when I do update on the upcoming course, you'll get first-hand information. For today though, keep an eye on X. I probably won't do another natural gas video today, and there probably won't be time. These markets move fast, but make sure you subscribe, click the links below if you're interested in my private group, and keep your eye on X today in case I update my next trade position. Take care.
Catch that wave, it's time to dive. Bulls and bears, they dance together in this market, don't you slumber. Prices jumping, floors and ceilings, ride the rhythm, feel the thunder. Swing, trade, samba, let's go higher. Buy and sell, ignite the fire. Profit margin, looking shiny. Feel the rush, no brokers, liar.